If you're considering buying with 3.5% down or less, you're probably weighing out these two top options. There's the FHA 3.5% down or the conventional 3% program. Did you know you can buy with as little as 3.5% down? You can even pair it with down payment assistance programs, meaning we've actually helped clients buy homes with as little as $10,000 total out of pocket. Hi there, I'm a licensed real estate broker and loan officer in California. I've served in mortgage for over 20 years, and I've helped thousands of buyers into their first home using FHA loans and other low down payment programs. In this video, we'll cover who this program benefits, guidelines, I'll share a buyer's experience using the program, and a visual cost breakdown of the transaction. Conventional loans often require much higher credit scores and tougher income requirements. Interest rates. FHA loans have lower interest rates than conventional loans, especially when you're buying 2 to 4 units, condos, or your credit scores under 680. PMI rates. FHA's monthly PMI is lower than the conventional loan at the same down payment. So you don't need perfect credit, you just need stable income and decent credit, and we'll guide you from there. If you're sitting on the sidelines watching prices go up, this could be your sign to stop waiting. 2-1 buy down. This feature allows you to get lower payments for the first 2 years. This is great for sale by owners, when you know the seller, or when you have a cooperative seller. Multi-units. FHA lets you buy 2 to 4 units with the same 3.5% down, and you can even use the projected rents to qualify. I recently helped a couple buy a fourplex last year. They actually waited 1 year and now they're buying a single family residence. They effectively bought their first investment property with only 3.5% down and of cash flows. Would you consider buying a fixer? FHA offers a rehab loan, which is a purchase and a renovation loan into one. Again, with only 3.5% down. This program removes concern for qualifying later for a construction loan or a second mortgage. This is a great way to buy a larger home with a smaller mortgage payment. And here are the FHA guidelines. Eligible property types. They include SFRs, 2 to 4 units, FHA approved condos, and PUDs. Credit scores. The minimum credit score is a 580 with only 3.5% down, or you can go down to a 500 credit score with 10% down. Now that's incredibly lenient. Debt ratios. This is the maximum front ratio and this is the maximum back ratio permitted. Now this is with strong compensating factors. Occupancy. The property must be owner occupied. No second homes or investment properties. Income limits. There are no income limits on FHA standard loans. Seller assistance. The sellers can pay up to 6% in closing costs. First-time home buyer requirements. FHA loans are available to repeat buyers. They're not limited to first-time buyers. Under certain circumstances, you can even have 2 FHA loans at the same time. And here are the credit event guidelines. Chapter 7 requires 2 years after a bankruptcy. Chapter 13, 1 year into the repayment with trustee approval. Often, they'll grant the approval if you've been paying on time. Foreclosure, 3 years from the completion date. Unpaid collections are allowed, but they generally have a $2,000 cumulative balance rule, meaning they cannot add up beyond that limit. Medical collections are excluded. Unpaid charge-offs usually don't require to be paid. Let me tell you about Samantha. She was a first-time buyer we helped with a 610 credit score. She purchased for $600,000 with 3.5% down. She got a gift from her parents, and we negotiated to have the seller cover her closing costs. Here's a visual breakdown of Samantha's transaction. This was her purchase price, her closing costs, and this was the total acquisition cost. Let's see the funds. Here's the FHA loan amount. These are the costs covered by the seller. This is a gift from her parents, and this was her total out of pocket. Here are some lesser known FHA perks. Non-occupant co-borrowers are allowed on 1-unit homes, which means you can have co-signers such as parents that might own a home or out-of-state borrowers. 100% of the gift funds can be used for the down payment and the closing costs. In other words, there's no minimum buyer contribution. All the funds can be 100% gift. Student loans, they can be in deferment and still qualify. Most people don't know this, but FHA loans are assumable, which means if rates are higher in the future, this becomes more valuable when selling your home. Down payment assistance. FHA loans are combinable with down payment assistance programs. Streamline refinances. FHA loans can be refinanced in the future without concern for income, credit, or appraisal requirements. If you have a realtor, we work together with them. If you don't have a realtor, I can connect you with realtors that are great at getting offers accepted with these type of programs. Ready to get started or just want to inquire? Click the link below to set a time at your convenience. Even if you're not ready to buy now, I encourage you to inquire today as it helps you plan smarter for the future. I hope you found this helpful. Go ahead and hit that like button and share it with someone who could benefit as well. And don't forget to subscribe to get our latest videos. Until next time, I'll see you on the next one.